Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, October 21st, 2020. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll notice the previous session, the ES closed with an inside day relationship. It basically closed inside the previous session's range, staying within a very clear range throughout the day between 34.30 really and 34.60. Again, we talked about 34.60 being the major pivot here. Once it failed to hold, it dropped. It has become resistance. Now we have an inside day. You can notice a pattern of lower closes day over the last week and a half, lower highs, lower lows. Everything continues to suggest short-term weakness until we see some significant rejection day, some sort of major tail, an bullish outside day, some sort of major rejection, and that may still need another wipeout to come. So again, if price were to fall through two-day lows, breaking through say 34.20s, that could open up quite a bit of downside here. That could return price back toward the previous week's close. So again, if price can't hold 34.20 here near term, that may open up more downside into the pivot range and the previous month's close, which should be around 33.38.5. Now at any point here we may see some sort of stimulus package get passed, and that could lead to some strength. Perhaps any weakness here that sees major buying could become a bullish outside day. That could break a flag and start pushing this thing higher. But again, we have to see signs of rejection, and we just don't just yet. All right, let's take a look now at the NQ. The NQ is looking very similar to the ES, lower highs, lower lows, inside day the previous session. Right now, it's failing to hold above the 11,750 level. And again, if two-day lows, now three-day lows are broken at the 11,600 level, that could open up a stop run day down. That could take this thing back to the previous month's close price, which is 11,357s. So 11,357 could be the retest, and that could be the previous month's close. Additionally, the FOMC key level is 11,355. So that's very good confluence right there in and of itself. So again, right now, based on the downward trend in the short term, any failed highs, any push higher could be seen as a rejection opportunity for a continuation downward. A push through 11.6 opens up more weakness toward 11.350s. All right, let's take a look now at crude oil. Right now, crude is down 1.29%. Again, this one backed off after attempting to push through the 41.50s. It did. It hit a high of 41.90. Very, very clear area of resistance here that has come into play. It's basically that gray dotted line right there. That is 41.87. It hit it here, right near that, right there, and hit it there. That is also the upper 25% level of this impulse sell-off. So this upper 25% level is here. You have the middle here, and then the lower 25% level is here. So again, very clear resistance here, and it just can't get going to the upside just yet. It hasn't failed outright. Again, great rejection here, holding this zone here, but if it starts to push down through 40.50, 40.45, 40.30, that opens up the potential to push down into 39 and below. Right now, everything's still flowing up, although it's still not really breaking higher. Once it does push higher, it opens up the upper end of this range into 43.78. All right, let's take a look here at gold futures. Now, gold futures currently showing some strength right now. You'll see right here. All right, here's gold futures. What you'll see right now is price had been chopping sideways here within a range, some compression here, and today you're seeing a bit of strength, up nearly 0.75% here, and is now above the 1926 level, trading 1929s at the moment. 1926 is the midpoint of the previous month's range. We talked about it here, rejected. It tried to hold here, failed, and here we are again for the third try. Are we about to see a breakout to the upside? Right, this right here would tell us a lot. If price can push through 1926s and hold, it opens up the upper end of the range into 2000. That's the previous month's high. If there's another failure here, say between 1926 and 1930, 1932s, that could open up again another rotation back toward the 1870 to 1880 zone as this thing continues to stay inside this range. So at some point we will see expansion. Again, this is the upper end of the range, but still too early to call whether it's going to see a full-on breakout or whether we'll just see another rotation down. Again, 1926, the key level to watch there. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.